Asia-Pacific plays a pivotal role in closing the protection gap, with IDF's 2025 annual review reporting over 4 million people protected and $340 million mobilized for resilience. To put this into context, we have Miguel Solana of UNDP and Saoirse Jones of IDF. Welcome, Miguel and Saoirse. So, why is Asia Pacific considered the key frontier in closing the global protection gap?
I would say that Asia Pacific is at the center of this global protection gap, mainly because it combines a few elements. First of all, the high exposure to disasters, and not only climatic, but also geological, uh, along with very large populations and fast growing economies, meaning that there is a greater capacity to lose economic advances of the past decades. The region has been the center of one of the most impressive economic growth that pretty much mean that whenever something bad happens, these losses can really affect the economy. What we see from UNDP is that when we think around financial resilience, there is no government in the world nowadays that would be able to face everything that would be stemming from this kind of events, meaning that we need to create a double approach. On one side, the governments need to be ready to put in place the mechanisms with the insurance industry to finance the losses that they would be facing. But also, we need to work with the insurance industry to develop business models that can provide protection solutions to diverse sectors of the economy, from households, from agriculture, from MSMEs. Therefore, this is where we see the great opportunity in face of this protection gap.
Asia Pacific is one of the most disaster-prone regions globally. Each year, more than $180 billion in losses come from natural catastrophes, and they're uninsured, with the greatest impacts falling on emerging and developing markets. In many of these markets, insurance penetration is only around 3%, leaving governments, businesses, and communities highly exposed. So it sits at the center of the global protection gap, and it combines high and growing climate risk, rapid development, and low levels of financial protection. The region is urbanizing and expanding infrastructure at pace. Decisions are being taken today on how cities, transport, energy systems, and public assets are being designed, financed, and insured that will either lock in vulnerability or resilience for decades. Because such a large share of the global protection gap sits in the Asia Pacific, progress here can have an outsized impact on resilience, public finances, and development outcomes globally. So it presents a major opportunity to embed risk reduction and insurance into development, moving beyond post-disaster aid and towards building future-ready nations. The Insurance Development Forum is already supporting this work and this transition, including through the Infrastructure Resilience Development Fund, not to mention our partnership also with the Asian Development Bank to improve the insurability and resilience of infrastructure.
But what exactly makes inclusive insurance scalable in climate vulnerable economies?
We have three elements. One is going to be the public policy frameworks. The other one will be the innovation. And the third one would be around distribution partnerships, inclusive insurance. I think this is a business of two elements. One, it's going to be scale, but the other one would be of like costs. In terms of policy frameworks, we can work with insurance regulators to improve the regulation around adoption of technology, distribution networks. That allows us to have an enabling environment. When it comes to policies, there's also a great opportunity for us to work with programs, ministries, where they could integrate insurance and financial protection into their functioning. For example, it's very important that we provide access to insurance to MSMEs. So can we create links between public programs and insurance products? When we move to innovation, one of the key elements is lowering the costs of operation. Can we adopt technology on the front and back end to create sustainable solutions? Finally, scale, where we see that strong partnerships with distribution allows us to be able to reach to people, to enterprises, and to a diversity of actors. From the side of UNDP, we have been running our international global innovation program to develop insurance solutions for smallholder farmers, for informal workers, for MSMEs, for vulnerable households across Asian countries. The idea is we have so far reached 136,000 beneficiaries, and honestly, there's more solutions under development and a projected benefit and eventually up to 1 million.
So to help us prepare for the future, this might be worth identifying what are the biggest barriers to sustaining the shift from response to resilience?
The biggest barriers indeed, these are structural, financial, and of institutional nature. And systems are designed to fund response rather than prevention. Public budgets, donor flows still prioritize post-disaster relief, with less than 0.5% of international aid going to risk reduction, despite clear evidence that for every dollar invested, it can save up to $15 in recovery costs. Secondly, risk is not consistently integrated into development decisions. Infrastructure is frequently planned without sufficient risk data to build resilience, and this locks in the said vulnerability and raises also long-term costs. Thirdly, insurance and risk management capabilities are often brought in way too late, treated as mainly a post-disaster risk tool, rather than as a source that can help shape resilience from the beginning. And finally, sustaining change requires long-term political commitment and coordination across many stakeholders. Responsibility for investing in risk reduction and resilience is not really clear, while the benefits are shared on long-term. This is again here where the Insurance Development Forum plays a role. We're a unique public-private partnership that is focused on implementation and scalable solutions, bringing in our insurance capabilities. The bottom line is that insurance is a critical enabler, but delivery depends on collaboration across governments, investors, and development partners.
I would say that when we look at most countries, we still rely heavily on post-disaster response rather than investing on risk management before the crisis occurs. We want to work with the governments to build these public policies that allows to integrate insurance into this. And what are the different steps that they need? Part of the elements when it comes to these elements is a lot around our capacity to understand and price risk. This is where we have been working with Milliman, launching the Global Actuarial Initiative, where what we are trying to do is to increase the number of actuarial capacities around understanding the risk. The next element is around like, how do we transfer these risks? Can we work with the national and international reinsurance industries to provide solutions that allows us to have this idea of transferring the risk into global insurance market? The other element, the integration of insurance with disaster risk reduction. So on one side, insurance is providing us the price and an indicator around what activities will be sustainable. But on the other side, we will also have to reduce the risk and the impact of this risk.
Thank you so much for sharing your thoughts and for joining us today, Miguel and Saoirse.
Thank you so much to our viewers.
Thank you very much.
Once again, those were Miguel Solana, Insurance and Risk Finance Facility Team Lead of the United Nations Development Program, and Saoirse Jones, member of IDF Operating Committee and co-chair of IDF Disaster Risk Reduction Task Force. For more news, visit insuranceasia.com.